Stocks versus real estate. What has been the better investment over the last 50 years? Ultimately, your choice of investment depends on preference, personal style, lifestyle, financial literacy level, one's financial health, and their overall understanding of the asset class that they choose or asset classes they decide to put money into. Granted, you don't have to pick one over the other. You can have both asset classes, but this is a question I get often, and so if I had to choose one, I am picking stocks and the stock market 10 out of 10. Simply because I'd rather own all the businesses that the entire planet and everybody depends on than own all the properties. And I'm going to tell you why. In this video, I'll cover both advantages and disadvantages for both of the asset classes. And based on the facts and what you learn in this video, you can then decide for yourself how you want to proceed with your investment journey. In full transparency, I have investments in both of these asset classes. When it comes to the stock side, I have 4 different stock portfolios. And when it comes to the real estate, I own land and properties. And so I like to think I'm qualified to speak on both of these a bit. Despite having investment in both of these asset classes, if I did have to pick one, I'm certainly picking the entire stock market over real estate. And like I said, I'm going to tell you why. So let's get rolling and let's get the party started. Cheers. Why the age-old debate between stocks and real estate? Well, the debate surrounding both of these asset classes often revolves around one's preference, one's risk tolerance, market conditions, and basically one's overall financial health and what opportunities they can take advantage of. Many investors, such as myself, like to diversify in terms of asset classes. That way you benefit from the advantages on both sides and you offset the disadvantages of both sides depending on market conditions and what's taking place. So let's begin with stocks. And what is a stock anyway? A stock, also known as share or equity, represents ownership in a company. When you own a stock, you essentially own a portion of the company's assets and earnings, and you also share some of the liabilities associated with it. And some of the reasons why a company will issue stocks is to raise money to expand the business, operations, expenses, sometimes pay off debt, or help scale the business in general, right? And so they will issue out portions of ownership to the general public, and we, you and I, investors, we get to buy pieces of this business as ownership. And so as the company grows and gains revenue and profits and expand, we benefit from that. Why? Because the share price that we bought will go up over time. And if we're lucky and they pay dividends, that's even icing on the cake, and they will pay us dividends just for holding the stocks. But we also do share, obviously, the risk involved in owning a business. And therefore, if the stock price goes down or the business fundamentals is not healthy, we also suffer from those losses. And one of the coolest things that most people are not aware of is that as a share owner and an investor in the stock market or a specific stock, you have voting rights, meaning you get to actually help vote and make decisions based on how the company's moving and the management team that's in play. So don't take that for granted. Don't just buy the stock and just sit by. I'm kidding. Buy the stock and just sit by. You don't have to do anything. They will do all the work. Now, if you're somebody who's interested about the voting piece and you want to keep an eye on what's going on internally or follow kind of the management decisions that are being made or in terms of hiring and firing and the board and X, Y, and Z, then of course you can pay attention to it. But people like me, I don't have time or the energy for none of that. I'm simply here to invest my money, let them do all the work, and I will sit back and collect the profits. Yeah. You can sleep and make money. That's what I want you to do. So investors buy and sell stocks on the stock exchange, and it's one of the best ways, in my opinion, the best way of actually building wealth long term, because it takes the least amount of money. All you need is just time, and you don't need any leverage or taking on additional collateral or expenses or debt to even begin investing. And you can start investing with as little as $1. Now, because investors and large institutions and traders are trading these stocks on a daily basis, you will experience some volatility of ups and downs. Sometimes it depends on the business fundamentals. Sometimes it's just, investor and consumer sentiment or the state of the economy at large in general. Why? Because all these things does impact every single business and their operations, whether they're going to earn more money or earn less. And so a lot of people pay close attention to the day-to-day activities, which I recommend that you don't do, because the stock price is not going to go up any faster because you're staring at it. And that's a quick recap on basically what a stock is, some of the fundamental pieces of it, and the things you want to understand before purchasing any stock, and the economy and the stock market, at large. Now let's talk about the advantages as to why I would pick the stock market over any other asset class. First advantage is high returns. Investors invest money because they want the highest return. And historically, the stock market has provided the highest annual rate of return of around 10% over like the last 100 years, okay? And just last year, it returned 24 to 25% for investors who invested in just the basic index fund, aka the S&P 500 index. However, it is important to note that past performance doesn't always dictate future performance, and that is why financial literacy and understanding your risk tolerance, what money you can afford to invest, is extremely important. But if you make responsible and wise investments in the stock market, you are basically guaranteed to benefit from the highest returns with the least amount of effort, headache, maintenance, and time. Advantage number 2 for stocks is the fact that it is highly liquidity, okay? This simply means that investors can buy and sell stocks quickly and convert those sales into actual cash that hits their bank account that they can use in a matter of 2 to 3 business days. So let's do a quick example. If you sold your Apple stocks today, it will show up in your investment portfolio, your investment account, in terms of where your cash settles as buying power. Okay, and it will say, let's say you sold $1,000 worth of Apple stocks, it will show up there as $1,000 in your buying power. You would then transfer this money to your actual bank account, and so this will take 2 to 3 business days for that transfer from your investment portfolio to your actual bank account. So in a matter of 3 days, you can actually use the money, and that liquidity makes it very attractive for investors. And that is also one of the favorite things I like about stock market investing in general, because not only if you have an emergency or something happens and you need cash quickly, you can convert that, right? Literally in 2 to 3 business days, you can have the cash that you need. On the other hand, when it comes to real estate, it's very difficult. If you need to sell the house because you need cash quickly, putting houses on the market can take months. And for some people, depending on market conditions and the house and the condition the house is in, it can take them years. Another icing on the cake for stocks is that even if you did sell your stocks and receive that money in your bank account in 2 to 3 days, guess what? You can then look at different opportunities or invest in different opportunities to grow that money, right? And so sometimes opportunity don't wait for nobody. It shows up, you can't take it, it's gonna go to the next person. So sometimes having that flexibility and ability to move cash quickly can be the difference between getting that next opportunity or not. Quick example of this would be, let's say a house or a property came on the market and is underpriced, and you have a pretty sizable stock portfolio, and so you decided, hey, well, I want to put say 20 to 50K down on this house, and so you can sell 20 to 50K $1,000 worth of stocks, and then you can just reroute that money and take advantage of the house in a matter of what? A week. Another advantage that stocks have over real estate is that you do not need leverage to partake in the best wealth building opportunity, which is the stock market. Okay, whatever amount of money you have, you can do it. You don't have to borrow money, you don't have to leverage money, you don't need no collateral, you don't have to have a down payment in order to invest in stocks. And that's because there's something called fractional shares. And what this allows you to do is it allows you to invest even as little as $1. Okay, so you can buy a fraction of 1 share, and I think there's a lot of peace and safety, and just a certain level of risk that is removed. The fact that you don't have to go borrow money and do something, right? Because if you borrow money to do something and it don't go well, you don't just go to zero. You're already in negative, and you still have to pay the money that you borrowed from whoever you borrowed it from, along with interest. And so with this, you can invest exactly what you have. And even if it doesn't go well, you just only go down to zero. That's better than negative. That leads us to the 4th advantage that stocks have over real estate, which is really access, right? Part of investing is really about legacy building, longevity, generational wealth, and the fact that you don't have to, everybody has access to the stock market. That's what I want you guys to understand. We can all invest in the stock market, whether it's through our Jobs 401k or Roth IRA or traditional IRA, or individual brokerage account that we open with, say, Fidelity, Vanguard, Charles Schwab, or Robinhood, you name it. We can all benefit from it. So the universal access to the stock market and all the financial firms that provide the platforms for you to be able to invest right from the comfort of your home, right from the technology device that you have in your hand called your phone, which I know everybody probably has an iPhone. And so the access to invest and build wealth is a beautiful thing because it allows families to make progress even if they don't make a lot of money or don't have a lot of money remaining at the end of every single month after paying their bills and providing for their family. Every parent would love to leave something for their kids, would love to make sure that the kids benefit from things that they didn't have a chance to benefit and experience. And so the fact that the stock market and buying stocks literally even this playing field out and gives families not just hope, but actual practical data and steps to doing exactly that to the best of their capability, to the best of their knowledge, is a beautiful thing. So we all have access to build wealth. It's not a finite game when it comes to the stocks, and it's not a scarcity game when it comes to stocks. There's virtually unlimited money and there's unlimited opportunity. So don't sit on the sidelines. Get in the game. Fifth advantage that stocks have is the ability to provide investors with diversification. I don't think there's any other asset class that has as much diversified opportunities for investors and the public to build wealth, right? We have 11 different industries / sectors. You can buy stocks. You can buy individual stocks in all of these different industries and sectors. You can also buy index funds that basically tracks the specific industry. So you can buy a specific index fund or ETF that tracks the financial sector, or the technology sector, or the healthcare sector, or the industrial sector, or the energy sector. And on top of that, you can also buy funds, ETFs, index funds that track multiple of all these individual sectors that I just mentioned. And so not only that, you can also diversify and buy small cap stocks, meaning companies that are not large, right? They're relatively small, or medium-sized index funds, medium-sized companies only, or large cap stocks only. And these are companies that are worth at least $10 billion by market cap, right? Or you can buy a variation of these. You can buy stocks or funds that are specifically designed to pay you high dividends. So, and then you can buy different indexes for different economic markets in different countries. So you can buy an international fund that kind of aggregates and has a bunch of different stocks from all over the world and all over the world's economy. Or you can buy a US specific one. You can buy a Europe specific one. You can buy a China specific one. You can buy an India specific one. So I say all that to say, when it comes to diversification, no other asset class comes even close to the opportunities and flexibilities that you have within the stock market. Like, I can own stocks in China right now, right? I could own Alibaba, I can own Tencent, I can own JD, and that's all the way on the other side of the planet. So when they make money over there, they bring me some of that money over here. So think about that. And one of the most lucrative things about stock market investing is that you can invest in REITs. And REIT stands for Real Estate Investment Trust. So basically, you can become part owner of the companies that own real estate properties, whether it's apartment complexes, whether it's malls and social gathering environments, whether the companies that own restaurants, companies that own factories, companies that own storage spaces, companies that own hospital buildings, companies that own, let's say senior living assistant facilities and so forth. So the beautiful thing about stock market investing is you can actually invest in real estate without taking on all the risk associated with real estate, right? You don't have to deal with all the actual boots on the ground, the maintenance, overseeing the property, putting the leverage up in terms of taking out a mortgage or trying to find a way to put down a down payment and all that stuff. You don't have to do none of that. You can simply buy a REIT, Real Estate Investment Trust, and when you buy a REIT, you're part owner of the company that owns those properties, real estate investments. And so you don't do nothing. They do all the work. And another cool thing about REITs is that when it comes to their profits, by law, they are required to give / pay 90% of their earnings or their profits back to you, the investors and shareholders. And so they pay a lot of dividends. So think about it. I can own stocks and real estate without taking on the headache. Cheap. And that's actually a perfect segue to get into the next advantage of stocks and stock market investing, which is it requires no maintenance. Okay? You don't have to do nothing. Like, you can decide the only manual maintenance you're going to do is you're going to manually execute your stock buys, right? And so maybe every 2 weeks you get paid and you decide I'm going to invest $500. And so every 2 weeks you manually send $500 from your bank account to your stock portfolio account. And then you purchase a stock or a fund within your investment account. Okay. But the beautiful thing is you don't even have to do that. Why? Because we have automated contributions. You can set a date and the time and a dollar amount to automatically go into your stock portfolio from your bank account, and you can tell it exactly what to buy every single month on a consistent basis without you doing anything. So you just go on about your day doing what you do, and every 2 weeks when you get paid, money gets invested all the time. Requires no maintenance. Unlike real estate, does require a lot more maintenance. You don't have to worry about, the toilet breaking, the pipes not working properly. You don't have to replace a heater and a boiler. You don't have to worry about roof damage. You don't have to worry about, let's say your tenants are not paying your rent, or how they are, damaging the property. You don't have to deal with property management. You don't have to deal with, just certain things within the tangible pieces and the manpower related cost and everything like that, right? And so you don't have to deal with none of that. It's out of sight, out of mind. Sleep, you make money going about your life. Real estate has way more maintenance than I would like, honestly. It's a headache, but it's good. And lastly, perhaps one of the most important advantages of buying stocks and stock market investing, and this is something that I want you to pay very close attention to, because it will literally save you so much money and make you so much money, and you will keep more of your money over the long term. And that is taxes. If you know how the tax code works in this country, you are going to build enormous amounts of wealth. And the stock market / stocks is the easiest way for everyday folks, the average Joe, to benefit from the taxation system that we see some of the other affluent individuals and other groups benefit from. Okay, let me give you an example so it makes more sense. You right now, if you are not investing, you are actually paying more taxes than basically anybody else, and you get taxed in a multitude of ways. The first way you get taxed is from your income tax. Depending on what bracket your income is, you might be getting taxed anywhere between 20 to 34, 35%. Okay. The second way you get taxed is anytime you use the money that's already been taxed on, right? You got your gross pay, and then deductions come out, including tax. And then the money that's remaining after all the deductions, so you get taxed again. You got federal, and then you got state tax. So that's actually like maybe 3 ways already. And then whatever's remaining after that goes into your bank account, which is your checkings. That's actually your take-home pay. That's the money you actually made for yourself. The fourth way you get taxed is anytime you use that money that you made for yourself to purchase any goods, services, or products, that get taxed. And so you're paying tax in 5, 6, 7 different ways, and you're not even recognizing that. And the cheat code is, if you want to pay less taxes, you have to invest your money. It's the only way to reduce how much tax you end up paying. And that is why it's important to take advantage of your job's 401k if they have provided you with one. Why? Because you get to put money aside and invest it in the 401k for yourself, and it's growing over time, tax-free. And so the best way to reduce your taxes is to invest the money. For example, if you have a company provided 401k, and let's say your gross paycheck is $2,000. If you decided, hey, I'm actually going to put $500 into my 401k, $2,000 minus $500 goes into your 401k. The remaining $1,500 is what gets taxed. But if you don't put any money in your 401k, you are getting taxed on $2,000. And so the money that goes in the 401k, it grows tax-free, it is savings, it is invested, and it's compounding over time. Okay? So it is better to get taxed on $1,500 in this scenario rather than get taxed on $2,000. That's one of the loopholes and benefits within the taxation code and the tax system. Another advantage that you want to have within this tax code is when you invest money into the stock market, every single year that goes by without you selling your stocks to take the profits, the taxation goes down. You go down on the tax bracket. Okay. So if you buy a stock today and you sell it in the same year, you're going to be taxed on the profits or gains at the highest ordinary income tax bracket, whichever one you're in, because it is viewed as income if it's sold within 1 year. The moment you sell it after year 1, it automatically goes down to the next lower tax bracket. And so the longer you hold your stocks without selling, the less taxes you end up paying on your profits. This is primarily the reason why when you invest, you want to invest for long term. Why? You get compound interest, you get to take advantage of that, and you get to pay less taxes. right? And for the most part, if you don't invest for long term and you take the money out, you're going to spend it, you're going to eat it, and then now you have no more money working for you. So invest the money so you don't have to pay as much tax. Now, I know that I've definitely sold you on stock market investing and buying stocks, but it would not be fair if I did not discuss the disadvantages and the downfalls or potential risk associated with buying stocks and stock market investing. And the first of these disadvantages and risk is market volatility. The way the stock market operates, which I stated earlier, is the fact that it fluctuates day in, day out, every single day, every week, every month, every year. And so with volatility comes certain risk associated depending on what stocks you've bought or what type of funds that you own. Okay, and if somebody doesn't really understand their risk tolerance or the risk and exposure that a specific fund or an individual stock has, they are going to be living on a roller coaster ride that they can't handle emotionally. So with that being said, at any given moment, we can see significant market swings and sudden, downturns in the stock market. And that's why sometimes you would see a 10% correction, a 20%, reduction in stock market activity and growth, or you might even see a 30 to 40% recession at rare moments. This brings me to the next disadvantage of stock market investing, which is the risk of capital loss. When it comes to stocks, yeah, your money can go to zero and you'll be surprised. You can go past zero. You can go in negative. And the people that tend to go in negative are the people that leverage trading, leverage investing in the market, or they are doing margin trading, which is basically you borrow money to trade and invest. It's not really investing, it's more trading, right? So if you're day trading, if you're margin trading, you're swing trading, you are, your options, contracts, all these other forms, they come with a lot of risk. And some of these, the worst case scenario is not that you lose all your money, you will go past negative, and it's a big deal. Even though stocks carry the potential for the highest return for investors, it also do carry the highest form of risk. But the good news is there are ways to offset these risks through diversification and asset allocation. These are topics that I've touched on in other videos, so make sure you go and check them out so you get a full understanding of both of these concepts, and I'll touch on them later as well. Next disadvantage is the psychological impact of buying stocks, and many people have a difficult time with it because it's very abstract, right? Because when you buy a house or you buy a car or a product or something, you can touch it, you can feel it, you can smell it, you can taste it. When it comes to stocks, it's not like that. And so conceptually, many people have a difficult time valuing or understanding or feeling secure and safe with an asset that, that is kind of abstract in that space. If they can't touch it, feel it, smell it, see it, they have a difficult time conceptualizing it, right? And so investing in the stock market does require a certain level of emotional intelligence and some psychological training, which is done through financial literacy and is done through watching some of these financial education content like you're doing right now. And you can read there are many books on these subjects that will help you get a good understanding of how these things operate, and so you can navigate it responsibly. But if you think you're the chosen one and you can just hop in the stock market and do whatever and think you're gonna become a millionaire overnight, good luck. You will learn very quickly that you don't want to F around and find out. Part of the psychological impact is also the emotional reactions to markets, to news, to swings. And a lot of times people panic sell and people panic buy. Why? Because there's FOMO, there's fear of missing out. And so you might see something online, hear from somebody, see something in the news, this stock is up 20% this year, 50%, some stocks 100%, or oh, it went up 10% today. And so you have a fear of missing out. Why? Because you want to get in and benefit from those gains. So you might just buy without actually doing proper research and homework. Or on the flip side, you might sell a stock because the news is bad, the economy is bad, everybody's freaking out, this and that. But you only know whether you should hold the stock or sell it, depending on your financial goals, part of it is if you have actually done the proper homework and research to analyze the company, and you did fundamental analysis, comparative analysis. We're not going to get technical, but if you've done your proper homework, it's easy to decide if you're going to hold a stock or sell a stock. Because based on the company's financials, things can be great, but the stock price can just be down. Now, you won't know if to hold it or not if you've not done the proper research. So psychologically, there's a huge impact, and many people suffer because they're investing with emotions more than rationality. Why? Because they are emotionally connected and attached to their money. And that's why you want to invest for a long term. You want to invest for at least 10 years or more, because that helps separate that psychological impact or reduce the risk of you making poor self-sabotaging investment decisions in the stock market. Yeah. Next disadvantage is really uncertain dividend payments, because at the end of the day, these companies do not owe you dividends when you buy their stocks. Yes, some of them have dividend payments, whether it's quarterly, monthly, semi-annually, but they are not required to pay you dividends. And so at any given moment, depending on market conditions or the business and industry conditions slash competition, how they want to, advance, innovate, streamline, you name it, a company can decide to not pay dividends or reduce the amount of dividends that they are paying. And so if you're somebody who's been investing strictly based on dividends and just looking at the dividend yields because they pay 5-10%, but not looking at the actual business, I urge you to make sure you do some additional homework to understand the business and the company that you have invested into. The last drawdown to stock market investing and buying stocks is the fact that you can have too much information and sensory overload. Investing in stocks is extremely easy and simple, and anybody that actually do it in the easy and simple way actually truly understands what they're doing, how to invest, and the right strategy and philosophy. But these days there are a million and gazillion people online, on social media, on YouTube, as you're watching this right now. And it can become overwhelming, right? Because you hear it all the time. You hear it everywhere. Everybody's saying, do this, do that, do that, do this. And there's so many layers to it, and there's so many levels to it. So it can be complex, and it can be too much information. And even I'm sensory overloaded right now. And one of the most interesting things about humans is if they have 2 to 3 options, they are more likely to make the right decision that's going to yield the better results. But if they have 10 to 50 options, they're probably going to make the wrong one every time, or they're not going to make a decision at all. Now, indecision is a decision. And so choosing to do nothing also means that you benefit and get nothing. So I urge you to not pay attention to too much things going on and the news and this and that, and simply buy the S&P 500 index or the ETF, ticker symbol VOO. Put your money there for the rest of your life. Do nothing else. Okay. If you're somebody who, everything seems so complex within the stock market space, and, sensory overload, and it's just too much going on and a million options, simplicity is sexy. Okay. Don't forget that. Simplicity is sexy. And that's how you're going to get the big bag in the stock market. The more complicated your investment strategy is, I can promise you the less money you're going to make. Right? Because the simplest solutions tend to be the best solutions. If I want to lose weight and be healthy in general, the simplest solution is to work out consistently well and have a healthy diet. That's simple. Okay. If I want to, I don't know, you can, as you're watching, you come up with scenarios and examples as well. Come up with one. Come behind the camera for once, or come in front of the camera for once. Now let's pivot and talk about real estate. And what exactly is real estate? Real estate refers to property and structure or any attachment improvements to that land. This includes residential, commercial, industrial properties, any vacant land, and real estate in of itself as a whole is a tangible asset. You can touch it, you can feel it, you can smell it, you can hit it, you get it. And real estate involves buying, selling, and leasing these properties that are subjected to national, regional, and sometimes local market conditions. The real estate industry can experience fluctuations based on supply and demand, interest rates, economic conditions, demographic trends, and quality of life, safety. All these other things does play a role. However, when it comes to supply and demand, the demand for real estate is always on a 10, always 100. It's inelastic, meaning it doesn't bend. It's literally unlimited demand for real estate. The problem is the supply. Investing in real estate, just like any other asset class, requires careful consideration of a lot of these conditions that I've just described, so you can make the right decisions for yourself. You'd be surprised how many people actually buy more house than they need, or buy more house than they can afford. Let's talk about everything good with real estate, and the first one is steady income. Real estate investment properties can provide a consistent and steady income for the owners, and this is done by either renting out the property to tenants or leasing it out to commercial and residential businesses and opportunities and office space and so forth. And this can generate a good stream of income all the way to the point where you actually might not need to pay the mortgage because your tenants are paying you enough to cover the mortgage expense. The next advantage is the property appreciation over the long term. Everybody knows that real estate is regarded as a long-term investment, and so you're looking to have it for 15 to 20, 30 years, and ultimately, hopefully, be able to pass it down for multiple generations. And so the potential for that to appreciate over the long term is massive. The next advantage or lucrative opportunity when it comes to real estate is leverage, especially when it is done properly. Okay, so one can actually leverage and use other people's money, right, to buy the property and bring it under their management and benefit from whether renting it or living in it, however you want to have it, right? And so most people don't have enough cash to actually buy the property themselves or have enough for down payment. So some people will borrow money, aka take out a mortgage or take out a private loan to be able to buy the house, and then as the property is under your control, you are then paying back whoever you borrowed money from, right? Your lenders. And by doing it this way, you build equity over time on the back end, and you get to control a larger portion of an asset without coughing up the entire expenses associated with it up front. Another lucrative advantage of taking advantage of that leverage system is most families don't have enough money, like I said earlier, to actually buy it full outright. And so part of the benefits is being able to raise your family in a safer environment, in a safer community. They can go to better schools, there's better hospitals, there are better opportunities, right? More affluent environments, and so better food, nutritional values. Also having a home and raising your kids in your own home is you create memories. These are invaluable things that money can't buy. You create memories, experiences together, and it just brings a whole different meaning to life and family. And that's something that many people don't touch on when they view real estate. They just kind of look at it more so monetarily as those benefits, but there are benefits that no amount of money can buy. And the next thing, which I've mentioned earlier, is the fact that real estate is a tangible asset, right? And so investors feel more control of ownership, and they can make modifications, advancements, changes. They can, renovate, they can add more, they can improve on different things with it. They can tweak it and change it. Another incredible advantage that real estate has is the demand for shelter. Okay, now as of right now, we can't live underwater, under the water, in the sky, and we can't live all the way up to the moon. And so that's the reason why we build up and not wide. Why? Because God is not making no more land. So there's that finite resource on how much land can actually be on this planet, right? And so anybody that has a real estate investment or a property, understand the fact that because of these limitations, there's limited supply, but the demand is always going to be high, okay? And so for me, like even right now, I'm living in an apartment, right? So when we build houses in apartment complexes, we build up, we don't build wide. So everything around me right now, that I benefit from, oh wow, it's actually snowing outside. And part of the demand for shelter is to protect you from the outside world. In this case, we got snow. It protects you from the weather, it protects you from certain things, and it's your place of peace. I think people don't give real estate enough credit when it comes to certain pieces, because we focus so much more on the monetary aspect of it, the income streams, the house itself, the tangible pieces. But one of the most beautiful things for families is to be able to raise their children in a healthy environment, healthy neighborhood, great house, create memories, do stuff together, have your own bedroom and just decorate it, the interior, whether you're minimalistic, whether you like antique stuff, you're artistic, you can put your ID, your identity, your DNA and blueprint onto the environment and make it your own, right? And these are some of the pieces that no amount of money can buy. And we always forget these intangibles or things that money, these invaluable benefits of real estate, of being able to spend quality time with family or have gatherings, whether it's Thanksgiving, whether it's Christmas, share gifts, eat great food, great meals, host a party, do surprises, all these different types of things that we almost take for granted on a daily basis, right? I think it's such a powerful thing for us to sometimes in terms of the psychological impact to understand why real estate is so valuable and is so important and is part of the holy grail of generational wealth or success, or the statement of, hey, I've made it. And since we're living at a time where inflation and interest rates are such a big deal, one of the advantages of real estate is that it's an inflation hedge. Okay, so when you own real estate, you have a huge advantage, because as rent prices and prices of goods and services goes up through inflation, you have an advantage because you have a property. So for example, if rent is $2,000 and let's say the average mortgage, or let's say that the average monthly mortgage payment is $2,500 or $3,000, in some cases, right, you are better off spending or having the mortgage because you're building equity on the back end. You're going to benefit from it down the road. You can pass it down to your kids. You can raise your family in it, or you can sell it, or you can rent it and get that residual monthly income coming in from your tenants. However, if you're just renting and don't have a real estate property or investment, you might be granted, you can move and switch about quickly, but that $2,000 you're paying in rent, you are not recouping anything monetary wise beyond just the fact that you can really up and move, and you don't have to worry about certain maintenance and pieces associated with real estate, right? So it's all trade-offs, and like I said earlier at the beginning, it comes down to preference, lifestyle, and just what asset class you think fits your investment and financial journey the most. So we've touched on some of the sentimental pieces of real estate and also the monetary value and gains of real estate. Let's talk about the downside, some of the risks that you need to keep in mind, or some things you want to at least consider before you purchase any real estate investment. First disadvantage when it comes to real estate is lack of liquidity, okay? It is extremely difficult once you get into a real estate situation, you get into an entanglement, whether it's with the financial institution, the bank / the mortgage, or whoever sold you the property, or with tenants or property management. There's just not enough liquidity about it. And so it's hard to just be like, okay, well, I don't want the house no more. I'm going to sell it today and be able to sell it in a week, right? So right now you have houses sitting on the market for months and months and years, because right now interest rates are extremely high. Inflation is high. The value and price of the properties are basically like 2 times. And even making 70 to 100K, you can't even afford like the average house or the median house, right? And so you're gonna have a situation where if you're trying to sell it, you're trying to make movements and get liquid cash quickly, you are at the mercy of the market and you're at the mercy of the buyers. And if you're somebody who's really pressed for cash and need, or pressed to just sell it and move on, it can be a very stressful situation to be in. I haven't had to experience it, knock on wood. I ain't got no wood. But and hopefully nobody really has to experience it in that manner. Another thing to kind of consider or think about is when you own real estate, part of your ability to be able to offset some of this downfalls and challenges is to make sure that you have enough liquid cash in your bank account or in a high yield savings account, where you can still have access to that level of liquidity, where if you need money quickly for repairs or maintenance or whatever, you can make it happen. So when you're going to purchase a real estate property, don't just buy it because everybody's buying it, or there's demand, or you feel like you just need to have something. Really think through it, right? Plan it out. Make sure, hey, do I have an emergency fund? How secure is my job? How am I managing my debt in terms of my credit card, car note, student loan, if I have any other debt that I have? What is the impact of that going to have if I pick up a mortgage or a real estate property right now? So cash is king. I've said this in the past and I'll continue saying this. Cash is king. I don't care what nobody tell you, okay? I'm telling you, once again, that cash is king. So definitely go ahead, if you're into real estate, do what you got to do, but make sure you have liquid cash, because at the end of the day, cash is king. That brings us to the next challenge or risk or downturn as to why real estate might not be the move, depending on where you're at in your life and your financial journey, is the high upfront cost, right? So you have to pay for down payment, closing cost, any additional things that needs to be done prior to the close. Most of the time, you're paying for 90 to 100% of it, unless you identify certain damages or repairs and work that needs to be done that you can get away with by negotiating with the seller to then reduce or or pay for the closing costs and a few other things, right? Or reduce the down payment or the price of the house in totality. And so for most people, to buy a house is extremely expensive. You are talking about someone's annual salary, okay, as a down payment. So you have to put down at least 20 to 50 to 60 or 70, 80, who knows, depending on the price of the house, what type of market you're in, your state, your location, wherever you're at in the world. So the upfront cost is a lot. And most people, we know that the majority of people don't even have $1,000 sitting in their savings. So where do you think they're getting this money from, right? The money has to be borrowed. And already you start off in a negative 200K or 300K or whatever it is, mortgage that you took out. And most people, they're actually not buying houses with cash in terms of down payment. Okay. Most of the time, people also borrow the down payment on that. And so it's a lot to think about. It's a lot to consider. And it comes with a lot of challenges up front. And so real estate is definitely not one of those things you want to just rush into, because you can't just rush out of, like I stated before, right? It's not as liquid. This high upfront cost is one of the biggest barriers to why majority of people actually can't afford to buy real estate. And a lot of investors have to think very carefully, because real estate is more of a slower, long-term thing that can take many decades to actually reap certain benefits and rewards, along with building, equity in the back end. You still got to pay the mortgage. You owe somebody money, right? As opposed to stock market investing, you just don't have to take on the leverage. You don't have to take on loans. You can invest what you have, and you can see the returns of that generally in a much shorter time frame. You can see your money triple on average every 10 years, right? It is very difficult to generally see a house triple in price every 10 years. Now, for those that plan on using real estate as an investment property to generate another stream of income or steady income on a monthly basis through renting the property, this is something you want to consider, which is the risk associated with having tenants, okay? There's a lot of risk associated with that, but I'm only going to touch on just a simple few. Right? You can have one of the challenges is you can have tenants that actually do more damage to your property, and therefore it affects the overall value of the property. You can have tenants that are unqualified or unable to make their monthly payments. And if they can't make the payments, you have to go through the whole process of eviction, and you still got to pay the mortgage. If your tenants don't pay, you still got to pay. So that's another challenge. Another problem is, you can have tenants that might move in and then they just move out, right? Which means they're there for 6 months, then they got a new job in a different state, different country, or different opportunity, and they just dip. And that means you still got to pay the mortgage, or so you got to go on a hunt to replace that income stream. So you got to then go and find another tenant. So now that we've covered both the pros and cons of stocks and the pros and cons of real estate, I'm going to summarize it and kind of give you guys which asset class has performed the best over the last 50 years and why I've decided to choose one over the other if it came down to it. The reason why I choose stocks over real estate is that if we look at the historical performance of these two asset classes, stock market / stocks have outperformed and provided investors with more return than real estate by twice. Now I know you're thinking, but Bafi, you just stated that land property is limited and we all have to live somewhere. We can't live in the sky. We can't live underwater, X, Y, and Z. And so the supply is limited. And so if I grab one, well, therefore, I know. But here's why I still pick stocks over real estate. Number one, in order for any house, real estate, property, plumbing, materials, paint, steel, insulation, wiring, electricals, anything that goes into actually building a house, a commercial property, a mall, a facility, fulfillment centers, storage spaces, everything from the raw materials all the way in their natural form, in the land, in the ground, before they get mixed and all the way through the supply chain process in factories and chemical changes and combining them with stuff, all the way through the shipping process, the delivery process, the installation process, the building process. Every single thing is owned by a company or a corporation. And so by default, everything in order to even make real estate possible or get real estate to the point where it even has any level of value is owned and dependent on what a company does in terms of providing service, product, goods, you name it, right? It all depends on what a company, a business does in order for real estate to even have any value or even for a building to exist and be a building. Not only that, in order to actually maintain these buildings, finance these buildings, pay the employers and employees and everybody involved for anything to keep running and spinning and stay alive and continue producing, innovating, it all depends on businesses. The banks are all businesses, okay? Home Depot and Lowe's, all businesses, but they provide you with everything you need in your house to make your house feel warm, welcoming, home-like, whatever your identity is or your personality, the vibe you're going for. Look in your room right now. As you're sitting here watching this video, look in your room and just make a quick note of every single thing and every inch of your environment. It was produced by a business. It was delivered by a business. It was consumed by a business. Okay, it was leveraged by a business. And so all these businesses are making profits, revenue, and money 24/7, 365. And so the fundamental aspect of it is that without these businesses, there are no advancement, no properties, no TV, no charging stations, no cups, no beds, no nothing. And guess what? All these businesses are traded on the stock, in the stock market, on stock exchanges, okay? And that fundamental reason is the main reason why I will always choose all the companies on the planet, the entire stock market, over any and every real estate. And I can own all these businesses without lifting a finger, without any maintenance, without taking on debt, without taking on additional, challenges and thinking about it all the time and this and that. And that, my friend, is the power of stocks and the power of stock market investing. Because I would rather own the source than the product. I'd rather own, say, the oil companies than the car. Because without the oil companies, the cars don't run. I'd rather own the chip making companies that makes the CPUs and GPUs in order for everything else to run than own everything else. I would rather own all the materials, the goods, the services that go into being able to build the house than own the house itself. However, you can own both real estate and own all the materials and own all the businesses and have them do all the work for you simply by buying stocks. And that is something to consider. Now, let me make this perfectly clear. I do not belittle real estate and its power in terms of an asset and what it brings to the table. But if I had to pick one over the other, I will pick every single business on the planet over every real estate, because without the businesses, everybody is screwed. The economy is screwed. Real estate market can go down, and guess what? Other things can still continue operating. But I can promise you this. If the entire stock market goes down, damn near nothing is operating, okay? Everybody's cooked. Unemployment is high. Incomes are low. People not spending as much. People not buying as much. People are screwed, and they can't take care of their family, and they can't make no progress. They end up digging themselves in further debt and deeper hole, and the cycle continues, and the economy goes down, and real estate goes down along with it. Everything else goes down when businesses are struggling in the economy. And so with all these facts and information that you've been armed with, do with it as you see fit and as you please. Ultimately, the choice of picking stocks or real estate is based on the individual. And the good news is you don't have to pick one over the other. You can have both. The only thing I will urge you is to make sure that you move about them strategically and don't make decisions without investing in your financial education and understanding these two asset classes first. Thank you for watching this video. Hope you learned a ton. And if you haven't subscribed already, make sure you do so. Have the notification bell on. Leave a comment and let me know your thoughts on how you feel about the video. Also, feel free to comment any future topics you want to see me cover. I'm more than happy to. So until next time, happy investing in the stock market and happy investing in real estate. But I certainly choose stocks over everything else because the entire planet spins on businesses. Cheers.